In the next 12 minutes, you'll learn why the old way of finding profitable real estate deals, sifting through listings and making gut feel decisions, is now obsolete. A fundamental shift is happening, powered by artificial intelligence. This isn't just about new software, it's about a new kind of information edge. Early adopters are using it to move faster and with more precision than ever before. The question is no longer if AI will change real estate, but where you can find the opportunities it creates before everyone else. Stick with me, because we are going to answer that exact question. For decades, real estate investing has been a game of painstaking research. Late nights piecing together scattered data, weeks spent on due diligence, only to find out a competitor has already closed the deal. It's been a massive frustration for investors at every level. Now imagine a market where your competition analyzes thousands of data points in seconds, not weeks, where they predict neighborhood appreciation with surprising accuracy and automate the grunt work that consumes your time. That isn't science fiction, it's the reality of real estate in 2026. This is a fundamental rewiring of how deals are found, analyzed, and funded. Analyses suggest AI could unlock billions in efficiency gains for the real estate industry by 2030, just by automating tasks. We're talking about autonomous agents and predictive models that savvy investors are using right now to gain a significant advantage. The gap between the AI-enabled investor and the traditional one is widening every day. The solution is to understand and leverage this technology. Today, we'll show you how. So what does this shift actually look like on the ground? It's not just software. It's physical. This is where many investors miss the bigger picture. The transformation is happening in two key ways. First, AI is creating a new powerful asset class, the digital infrastructure that supports it. Here's what most people overlook. The incredible demand for AI requires massive, energy-hungry data centers. To give you a sense of scale, total spending on data center infrastructure is projected to approach $1 trillion annually by 2030. This has made data centers one of the most sought-after property types in commercial real estate. For smart investors, this creates a phenomenon I call the AI halo effect. A new data center acts like a gravitational pull on the local economy. But the obvious play, buying land right next to the site, isn't always the best one. The real opportunity is in the 3 to 5 mile radius around it. Think about the need for workforce housing, retail for new employees, and warehouses to support the facility. This isn't just theory. Look at Quincy, Washington, a small town that became a data center hub, fueling economic growth and new public facilities. By identifying where the next data center hubs are being built, you can position yourself to ride the wave of growth they create. Second, AI is transforming how we value and manage properties. The global market for AI in real estate is growing rapidly, which means capital is shifting toward firms that can make better, faster decisions. The best predictive analytics models can now forecast property values with greater precision than ever before. These tools don't just look at comps. They analyze thousands of variables in real time. Demographic shifts, employment trends, infrastructure projects, even social media sentiment, to predict which neighborhoods are poised for growth. For commercial real estate firms, AI is now a board-level priority used to enhance asset values. This creates a clear divide: those who use data to make decisions and those who are left guessing. This new reality requires a new toolkit. So let's break down what that looks like. So how do you get this advantage? It comes from knowing which levers to pull, and you don't need a PhD in computer science. Let's break down the 3 core components of the new AI Investor Toolkit. First is predictive analytics for deal finding. Think of this as your forward-looking radar. Traditional deal finding is reactive. Predictive analytics is proactive. AI platforms can analyze millions of data points to identify opportunities before they hit the market, pinpointing properties with a high probability of being sold in the next 6 to 12 months. Instead of just seeing the Starbucks effect, AI can analyze hundreds of different growth drivers, new parks, grocery stores, or transit lines, to identify the specific blocks primed for appreciation. This is about turning scattered market signals into a clear investment thesis before your competitors know where to look. Next, we have autonomous agents for due diligence. Due diligence is often the biggest bottleneck in a transaction. The old way involved your team spending days manually reviewing every lease in a 50-unit building. The new way? An AI agent does it in minutes. This isn't just a minor efficiency gain, it's a strategic advantage. It's not uncommon for firms to report that AI can reduce lease abstraction time by up to 70%. The investor who completes due diligence in a day instead of a week is the one who wins the deal. These tools can instantly cross-reference rent rolls, flag discrepancies, and generate a summary report, freeing up your team to focus on high-level strategy. Finally, there's generative AI for analysis and operations. This is where the technology becomes a personal real estate analyst. Instead of being limited to fixed dashboards, you can ask complex questions in plain English. For example, identify all warehouses under 50,000 square feet within a 10-minute drive of a major highway in areas with a projected 5% population growth over the next 3 years. The result is the starting point for your entire acquisition strategy, generated in seconds. These tools are powerful in theory, but now we're going to put it all together and show you how this advantage plays out in the real world. We've just covered the what and the how. If you want to go deeper and see the exact platforms and prompts we use for this kind of analysis, make sure you're subscribed and have notifications turned on. We'll be breaking those down in upcoming videos, and you won't want to miss it. All right, let's make this tangible. Meet Sarah, an investor who knows that the real money is made by getting there first. The setup. Sarah reads in the financial news that a major tech company is building a hyperscale data center in a secondary city in Ohio. While other investors scramble for land next to the site, Sarah sees the bigger opportunity, the halo effect, the AI analysis. Sarah turns to her AI toolkit. First, a predictive analytics platform maps the 3 to 5 mile radius around the data center, confirming a severe shortage of modern rental units for the coming influx of workers. Next, she uses a generative AI agent with a strategic prompt. Identify properties zoned for multifamily or single-family properties over 2 acres with rezoning potential within the 5-mile data center halo. Prioritize properties not on the market that show signs of seller fatigue based on ownership length and lack of recent permit activity. While others waited for listings, her AI found an ideal off-market property, and Sarah was already in conversation with the owners. This is what information asymmetry looks like in practice. The AI returns a short list, including a collection of 4 adjacent older homes on a 3-acre lot. The AI-powered due diligence. Sarah feeds the property into her due diligence AI agent. Within minutes, the agent pulls public records, confirms the zoning, and provides preliminary title reports. This ability to review documents in seconds instead of hours completely changes the timeline. The outcome. Armed with this data, Sarah contacts the owners with a confident, well-researched offer before other investors even know the opportunity exists. She acquires the land at a favorable price. Over the next 2 years, as the data center is built, demand for housing soars. Sarah develops a 60-unit modern apartment complex, which is fully pre-leased before construction is even finished. Her success wasn't luck. It was a strategy that turned public information into a private, high-conviction investment. This strategy is powerful, but it's not foolproof. With any major market shift, there are risks you must understand before diving in. Let's talk about what can go wrong and how to protect yourself. It would be irresponsible to ignore the pitfalls. AI is a powerful tool, but it's also a magnifying glass. It will amplify a good strategy, but it will also amplify critical errors. First is the garbage in, garbage out problem. An AI model is only as good as its data. If your tool relies on outdated or inaccurate information, your outputs will be flawed. Before adopting any AI platform, the most important question to ask is, where does your data come from? The best tools use a mix of public records, proprietary data, and real-time signals. Second is the black box problem. Sometimes an AI model will give you a recommendation without making it clear why. This is where human oversight is non-negotiable. AI is a tool to augment your expertise, not replace it. You are still the final decision maker. Always sanity check the results against your own market knowledge. Finally, there are implementation challenges. Many firms face technical issues and a lack of in-house expertise. The key is to start small. Pick one high-return task and pilot a tool to solve that specific problem. The biggest risk, however, may not be the tech, but the market itself. The data center boom faces real headwinds from power grid limitations and local opposition. This is where AI becomes crucial again. A surface-level analysis might just show growth, but a deeper, AI-assisted due diligence process can flag these regional risks, allowing you to navigate them instead of being blindsided. Understanding these risks is what separates the amateur from the professional, and it brings us to the fundamental choice every investor now faces. We are at a clear inflection point. AI isn't just another software upgrade. It's a structural rewiring of the entire real estate market. We've seen how it's physically reshaping markets through the AI halo effect and giving investors a new toolkit to operate with more speed and precision. The gap between the AI augmented investor and the traditional one isn't just widening, it's accelerating. The advantage that exists today will be standard practice tomorrow. The choice is no longer if you will encounter AI in your deals, but how. Will you be the one reacting to change, spending hours on manual work while others move faster? Or will you be the one leveraging these tools to gain an analytical edge, find opportunities others miss, and build a portfolio designed for the future? The tools are here. The shift is happening now. What's the one task in your own investment process you'd want to automate with AI? Drop your answer in the comments below. I read all of them, and it helps me decide what to cover next. And if you haven't already, subscribe so you don't miss our deep dives into the specific tools that make this possible. Thanks for watching.